Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we're going to be taking a look into discounted price and zone trading. Those are two important smart money concepts and ideas that are going to help you tremendously in your trading. Because what you may find is that price will not always be perfectly trending up or trending down, right? And you must adapt to the market condition. So I'm going to be giving you some ideas, principles, and keys on those two concepts that you are going to be using most of the times when you have a particular market stuck within a range. So if that sounds like something you want to learn today, make sure to stay tuned for the video. Okay traders, we're on the drawing board as we usually do on this channel, and as I said before, we're going to be taking a look at discounted prices and zone trading. We're going to be discussing that topic today. So matter of fact, let me actually get started by drawing a potential ranging and consolidating market, right? Because that's going to be absolutely related to discounted pricing, and I'm going to be giving you some ideas regarding how the algorithm reads those ranging markets. So let me get started and let's draw a potential ranging market, right? So just do it like this. Okay, I think we can all agree that this is a market that is overall stuck within a range, right? We're not breaking structural points higher and we're not breaking structural points lower. So we can safely say that, hey, we are in a ranging market. And the first thing that you want to do once you have identified that the market you're looking at is ranging is actually determine your higher boundary of the range, which in this case could look something like this, right? You may want to use a order block at the higher end of the range, and you want to be doing the same thing for the lower end of the range, right? We can now safely say that this market is ranging. Now, the reason on why a particular market may be ranging actually varies across different scenarios, right? But I'm going to be giving you an idea here. So let's imagine this market that is ranging is any whatever main currency, right, against the US dollar, right? Whatever currency, whether that be the GBP, the Euro, NZD, whatever it may be against the US dollar. And you know that you have a high impact news release on Friday. And this is the price action that you can see on a Tuesday, right? You can determine that price is now ranging. Well, with probability, you can now say to yourself that this ranging is going to continue. There is a high probability that this ranging action is going to continue until that news report gets released, right? And that's where the aggressive move up or down out of the range will occur, right? If, for example, the market is predetermined to go higher once the news gets released, what you will happen, the manipulation pattern that you will see could potentially look something like this. And if you actually take the time to backtest this concept, you will see how this occurs, right? If the market is going to break up after the news release, what you will find is that price will start initially pushing aggressively higher, right? Targeting those buy stops, because again, if we are ranging, we're creating resistances, supports at the bottom, resistances at the top, double tops, double bottoms, all that sort of deal, right? So the market will initially move aggressively up, target those buy stops, right? Those people that want to buy are actually now in an active trade, and what you will find is that price will sharply reverse, take them out, target the sell stop, right? People that wanted to sell below support are also now in a position, in a sell position, and then you will actually go higher, right? Because that way you are taking out people that want to buy over here, you're taking out people that want to sell below here, and now you can now smart money can safely take the buys higher because everyone is essentially out, and they're going to be the only ones driving price up or down. Now, in a bearish scenario, it's actually the same thing, just flipped the other way around, right? I'm not going to take too much time on this, but you will have price potentially aggressively moving down, targeting the sell stop first. Those sell traders are now in their position. Then we're going to get a sharp and quick reversal. Those buy traders are now in their position, and then we're going to be resuming down, right? Because no trader that decided to sell here is going to be willing to hold that immense and huge and quick drawdown, right? So that's an idea on how you can actually determine if price is going to keep ranging when it's potentially going to be breaking out of a range. So for a scenario where you're watching a market and you know that the probability of it continuing ranging is actually high, whether it may be because it's waiting for a particular news report, or you can actually read that within price action, right? Just the idea is whenever you have a range in market and you know that the probability of it continuing in the range is high, you can apply some concepts that I'm going to be teaching you right now. So the first thing I want to talk about is the 50% of the range. Now, just imagine this is actually the 50%. Again, I don't have a tool to measure the range, so we're going to be imagining that this line right here is your 50% of the range. Now, this is known as your equilibrium point, right? This right here is known as your equilibrium point. And what does that mean? Well, that means that the algorithm is going to see anything above this line, right, is going to be seen as expensive. And for that reason, the probability of smart money actually continuing buying over here, right, and interested in buying is going to be very low. And if we look at the opposite end, any price below this line is going to be seen as cheap and can easily be bought up by smart money and central banks. So that is actually a pretty powerful concept, right? Because if you know that we're going to continue ranging and you are above your equilibrium point, the deeper you go into the upper range in this case, the more expensive it gets and the easier it will be to sell the market, right? The algorithm is going to say, okay, we're now trading above the equilibrium. I may want to be looking for sells, right? If the bias is that we're going to maintain the range, right? That's pretty important. You need to understand that your bias should be that you're going to continue within a range. So yeah, that's pretty much it in terms of discounted prices, right? What I want you to understand is that you don't want to be buying above the equilibrium point because that's expensive, and you don't want to be going against the algorithm because the algorithm at the end of the day is what prints the candles, and you don't want to be trading against that, right? So you actually want to be looking for sells. If you want to trade the range, you can actually wait for the 50% and equilibrium point to be breached, for example, to the upside. You're going to be patiently waiting for your confirmations or whatever you use to get involved in the market, and then you can potentially take a sell. However, you should not expect that we're going to be all of a sudden making new lows, right? Especially if we're ranging. You just want to be trading from zone to zone, right? You just want to be trading from the upper end to the lower part of the range. And essentially, it would be the same thing if you're looking for buys, right? You're going to be waiting for the equilibrium point to be breached. Now you know that the algorithm is seeing all this price action. Again, imagine this is the 50% of the range. All this price action over here is going to be cheap to buy. So the probability is that the algorithm is actually going to buy the market back up, whether that be at the 61%, meaning deeper retracements, or the 78%. We don't know with 100% security, right? You're going to need to work that out for yourself. And that's pretty much it in regards to discounted prices, right? Wait for those discounted prices. The cheaper you can buy, the better for you, right? Because just look at it logically. Why would the people that are manipulating this particular market buy so high up, right? So expensive. They're actually, if they want to buy the market up, what they're going to be doing is pushing it up, right? Selling it back down into a cheaper price, into a price where they can buy for cheap, and then they're actually going to buy it back up, right? You need to understand that the algorithm is actually programmed, determined, there's no human interaction, and you need to be playing within the rules and the games that the algorithm presents to you, right? Wait for those discounted prices, whether that be to the upside or to the downside, but actually wait for those. So with all that theory out of the way, let's actually go back to the charts and try to implement some ideas, right? However, I don't want to make this video too long, so we're going to be doing that rather quickly, right? So let's go back to the charts. Yeah, so this is the trade I was initially in. As you can see, we're pushing higher. However, I'm not going to get into why those trades were taken against. This is the live market, whether you want to believe it or not. That's absolutely up to you. So yeah, that's that. We're going to be actually taking a look at a different market. So let me take a look. Let's, for example, go to AUD USD 3-hour time frame, and let me try to find a range, right? Maybe even lower. So let's see if we can find a range. I can see a range right here. So I think we can all agree that this is a ranging market, right? For the time being, this was a market that was ranging up and down at this point, right? We weren't going anywhere until this happened, right? But for now, this is your range, right? And as I said, the first thing you want to do within your range is determine your upper end of the range, which in this case, I would safely say that I would use this structure right here, this wick is a auto block on itself on a lower time frame, so we're going to be seeing some nice reactions starting over there, right? And we're actually going to be doing the same thing for the lower end of the range. So now this is my range, right? And as I said before, the very next thing you want to do is determine your 50%, aka equilibrium point, right? So let's actually do that. We now understand that this right here, right, this line right there is my equilibrium point. Equilibrium, whoops, equilibrium. And now I understand that anything above this line is expensive to buy, and anything below this line, sorry, is actually cheap to buy, right? So we understand that. And as you can see, right, the 50% of the ranges are always going to be of a very big importance. And we can see it here, how it plays around, right? You're going to see a lot of price interaction within the 50% of a particular range, right? Another thing we can notice here is that, for example, if we look at this end of the range, we can see that every time price went up above the 50%, the algorithm saw that as expensive and quickly went all the way down, right? And if we're looking at the opposite end, we can see the same. Anytime price is below this line is seen as cheap and expensive to sell, and for that reason price actually pushes up, right? So I think this functions as a okay video on discounted prices and zone trading. Again, I cannot get into too much detail on the free YouTube channel because I do run a private group, and this is stuff, more in-depth stuff is actually reserved for them. So I'm not going to get into too much detail, but the ideas I want you to take away out of this video is one, how to identify a range, right? And one idea on whether a range may continue and how to take advantage of that, right? The very next thing you've learned today is the importance of the 50%, which stands for equilibrium. And another thing you've learned today is about those expensive and cheap prices, right, that the algorithm actually sees. So I hope this video was useful for you guys, and stay tuned for more upcoming uploads, and I will actually see you guys very soon. Until that, I wish you good and profitable trading.